So give you an update on the markets. Now the rand slid by nearly 1% against the dollar this morning, extending losses a day after the U.S. Federal Reserve provided the clearest indication that it is ready to hike interest rates, but stopping short of indicating just how aggressively they're going to hike. Now, the JSE is poised for a bumpy session after its counterparts in Asia fell between 2% and 3% as the Fed's hawkish tone ripped through the markets. Makwe Masilela, Chief Investment Officer at Makwe Fund Managers, joining us now to talk us through the developments that we're likely to see in the hours that will follow. Ndate Makwe, season's greetings to you, by the way. I haven't spoken to you this year. Now, ahead of that Reserve Bank's decision on the interest rates, how are the markets faring this morning?
Compliments, Toli. Yeah, unfortunately, it's a sea of red. You know, we gave back all the gains that we've seen yesterday. Remember, the local bonds closed up 2% yesterday. Today, we are down or opened 2% down. And it's more of a taper tantrum, and it's affecting all the risky assets. Even you look at the likes of your gold, is get affected badly. And you look at the local bonds, you know, your goldies are the ones which are extremely doing very bad. I mean, at some point, you see some stocks down almost 6%. So it's more of a taper tantrum because, as you said in your intro, yes, interest rates expected to go up in the U.S., but the question here is we think they will go up by more than 4 times. So that is giving most investors the jittery and the reason to run away from risky assets.
Yeah, we already indicated the currency's slide by nearly 1% against the dollar this morning. Let's focus the attention on it if we can. Is it still flat? And the question that follows, therefore, is will the U.S. Fed outcomes have a bearing on how the local MPC or on the local MPC decision?
It will in a way, you know, and yes, we've seen the rand reacted because the US dollar had to strengthen. We saw the US yields going up because we expect interest rates to go up rapidly in the US. Back home here, we expect interest rates to be increased later this afternoon, and they have to because, number one, you don't want to be behind the curve, and second, we've seen our inflation. The last print, it showed us that we are sitting at 5.9%, and we know the target is anything between 3 and 6%, and also it's important to maintain that interest rate differential between ourselves and the U.S. So as they hike, we have to catch up as well to continue hiking. And remember, we started our hiking cycle last year, November.
Yeah, let's talk company news. Pepco Holdings releasing a trading update for the 3 months which ended in December. How have they fared?
Not too bad. Looking at their revenues for 3 months, they just increased by 1.3%. Their sales increased by almost 3.1%. But you look at the credit sales, they increased by 3.2%, and they happen to make 93% of their total sales. And their credit sales increased by 2.8% because the company continues to be very strict when it comes to granting credit. But all in all, I don't think the company did badly because you need to bear in mind that out of the 549 stores that were damaged, they only managed to open around 450 thereof, meaning 82%. So you've got almost another 166 stores which are not yet open. So that had an impact on their sales and on their revenue.
Let's conclude our conversation, Dada Masilela, with the Lewis Group, which has also published its trading update for the 9 months ending December 2021. Talk us through their numbers.
Very strong performance. The sales growth increased by almost 12.7%. And we look at the credit sales, you know, they managed to do well, increasing by almost 16%. And their cash sales increased by around 9.4%. And revenue for 9 months was impressive, up 8%. And as it is now, we know that out of the 57 stores that we looted, only 3 are still yet to be opened. And the company also managed to reduce their net debt by almost 26%. So I think the company is doing much better compared to the other ones because they continue to be able to have a strong performance despite knowing that consumers are still under strain and also despite the fact that our local economy is not doing that great.
Yeah, Makwe Masilela, thank you very much for that markets update. You've heard him. He says it's a sea of red at the JSE at the moment. He is the Chief Investment Officer at Makwe Fund Managers.